All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. It is June 13th, 2022 on a Monday. Let's go ahead and rock and roll and get to work. Bottom right-hand corner of your screen, little white logo. Click on that. Turn on notifications. Subscribe to our channel. Make sure to like our videos. Let's go ahead and get to it. All right, so the Dow futures are down about 2%, 633 points. NASDAQ down 3% this morning, 11,511. S&P down 2.47%, as you can see right here. I did put a line because we broke the lows, well, really close to the lows that we had, I believe, a couple of weeks ago, where we got around 38.02. We're now at 38.04, and I'll go ahead and actually show you the setup. Russell, 2.5% to the downside. Crude oil, even crude oil is down 1.5%. Gasoline futures are down 2.21%. Gold futures, nowhere to hide, down 1.5%. Silver futures down 2%. Again, you're just getting a washout. The only thing I'm looking for now is do we get capitulation, in a sense? Is this where where everyone throws in the towel? Do we get to 1,000 points to the downside? Is this the event? Is this like a Black Monday event? Well, we have to see, because there's a couple of things we have to look at. Euro dollar down 59 pips. Dollar yen down 43 pips. Bitcoin futures. Now this one, look at this. Bitcoin right now, this is future side. Massive gap down, 23,620. If you've been watching the YouTubes with me, we've talked about that 30,000 level. 30,000 was stuck for a while. And I said, if we broke 30,000, you're going to get to 20,000 or 19,000, which is the 2017 highs. I think that's pretty much the most it'll get. Personally speaking, sure, we could break down a little more. But again, let's go ahead and bring up that chart, and then we'll go over the rest. Again, guys, it's right here. Look at that, 20,707. That was the 2017 peak. We received right before. Let me go ahead and make sure and place an alert. I think I have that there. I should be okay. Let's go and expand it a little more to make sure that I have the actual level. 20,650. Yeah, that's your peak in 2020. Your peak here from 2018. That's right there. You can see it, 20,650. Let me see if I can max it out. Yeah, that's the most I get with futures. So when it comes to Bitcoin, the spot, I'd have to go into my Bloomberg and get that. But again, that's still the point I'm looking for, 19,500, 20,000. And I've said this before, again, guys, if you need the money, I told this investment club when it comes to Bitcoin. Bitcoin is extremely, extremely volatile. I don't think anyone needs to reiterate that, obviously. Here's a tweet that I saw. This is from Investment Club. I sent out some stats on previous market cycles. 23 to 2015, Bitcoin 1127 to $200, minus 82% drawdown. 2017, 2018, 19,423. That's your 2017 high. We went all the way to 3,217, minus 83%. Ethereum 1448 to $85. Bitcoin 67,167. That was our high. We're now at 27,682. That's fixed. Now we're at 23,575. If we do the exact calculations, let's go ahead and average it to around 83% of a drawdown. We'll go to 83% of 67,167. That's 55,748. If we go ahead and actually do that, 67,167 minus, I had the number here, minus 55,748. That would be a drawdown of 83%. You would get to 11,419. So about $8,000 less than that 2017 level. Could we get there? Absolutely. Absolutely. Why not? Remember, Bitcoin is not a storage of value. Not yet anyways. And it's definitely not an inflation hedge. So again, that's not true. So you can't really say that. The way it's moved, definitely not a way to play inflation, obviously. And it is a risk on asset. So, I mean, this is the highest risk of asset. It's the most speculative you can get, other than NFTs, I'm assuming. And again, when it comes to Bitcoin, you have to understand, this is the name of the game. If you need the money today, keep in mind, I just gave you a number, 83% drawdown. That would be 11,000. If you need the money today, this is where you sell. You need to get out. When you get a pop, I wouldn't sell into weakness. I'd see if we get that gap fill to around 28, 4, 22. or so, you'll get that gap fill. That's your second chance to get the hell out if you need to. I haven't sold anything. I still have it in my my Trezor wallet. Out of sight, out of mind. I don't want to look at it. Leave it alone. And I still dollar cost average as I go. Again, that's just me. Everyone's completely different. If you're in a liquidity crunch, you need to make sure you sell. Just a heads up. Ethereum futures down 26%, now at 1,219. Now again, I don't have a max chart here. I'd have to get into Bloomberg right now in order to bring up Ethereum. But again, you could see on a daily chart, new 52-week lows across the board. When it comes to futures, I'm not going to have much on Ethereum. I'd have to get the spot price on Ethereum, but I'll go ahead and put up a couple of charts on Bloomberg and see if I can check it out for you. I always check it out on my phone, if anything, when I'm out of the office. So that's Ethereum. Again, I'm holding both. Nothing changed there. Ethereum is in my hard wallet, my Trezor wallet. So is Bitcoin. The altcoins I have, they're in the exchange. They're down, obviously, but nothing doing yet in terms of getting rid of anything. I mean, I'd rather just hold it. 10-year yield, very important. We talked about this 10-year yield. Look at this gap up, guys. Now you're talking, that's breaking out on yields. Look at that breakout. Now we're above 32.48, highest numbers that we had since around 2011 in yields. Again, you could start bringing it out. Look at this, 32.48. Now we're above that. Now there's a path to get to 4, but the problem is that we may be getting to oversold or overbought levels across the board. You got some gaps to fill. I know they're not going to make it easy. If everyone's a bear, this is what happens. You start getting some gap fills. There's a huge one here on TNX. We know that. Let's take a look at the dollar. Dollar soaring. We know the drill. 105 exactly. That's that peak that we had in May. We just rejected it. This, if we get the dollar to fall and yields to fall just slightly, you're going to see a bounce in equities, which is the S&P. Now let's bring up the S&P on the hourly. We talked about gaps all the time if you're here in the morning note or the aftermarket recap. It's all about gaps. Gaps, right? We got one. This is from CPI on Friday. That's one. We're going to have a gap down now. So we're going to ES around 3807. Again, that'll put you right here. We'll open right around here. So again, you'll have a gap at 3,900 and right at 4,017. The key is you're not going to get a gap fill immediately. Eventually, you'll get there. You also have another gap to fill at 4117. This is just SPX index, not S&P futures. But again, this is important to look for because when you start getting pops, you're not going to go straight to zero today. Sorry. You're going to get some bounces here and there, some volatility. It happens. I assume that we crash a little more today in the morning. We'll probably fall maybe to 3750. Again, that 3750 level, that was a key level that I was looking for to possibly start looking to buy. VIX is high, elevated, but not elevated enough. Is this, if anything, when you're looking at it in the totality of the market, is this the capitulation level? Was the CPI that capitulation level event? Meaning that, cash me out, get me out. And that's when you start seeing put to call ratios go spike high. This is where you start seeing less volume in the market because everyone's terrified. And that's when you usually get closer to a bottom. You still have a little bit of exuberance or hope that things will bounce right away. But again, we do have a couple of gaps to fill. I do have some SPY puts with the team, the 385 puts. So again, if you are part of the Discord service with us or Signal service, last week was absolutely brutal with that chop. We got SPY puts. That was the only trade we did on Friday. We held it smartly. We're deep in the money. Take it in the morning. Leave a runner if you like. It expires today. Get the hell out and move on with your life. And then we'll take a look. I wouldn't rush into puts right away. Do not rush into puts right away because you do have some upside gaps to fill in SPX and NASDAQ and Russell and all the other ones too. So again, just be careful. In terms of the VIX structure, here's something that I had a conversation yesterday with my VP, Nick. We were talking about volatility. And he was kind of amazed that he doesn't see the VIX higher. And again, guys, the VIX is more of a survey than anything else. It is based on the 30-day forward period based on call options. Again, the higher the VIX, the more the fear. We call it the fear gauge. Yes. We're trading at 32.74 on VIX, up 17%. You need to get above 40, guys, to start really seeing where you start getting to a bottom or reversal. Again, above 40, that's what we want. We want to check off the list of, is the world over? You need VIX over 40. Yields, again, are playing the role. Dollar is playing the role. Gold is playing the role. Again, if gold is red, that's usually a pretty good sign where everyone is just saying, get me out. And again, when that happens, that's when opportunities come. So that's a lot to say. Let's go and answer some questions. Morning, Carl. Thoughts on Apple puts for 130 for this week? Okay, we got a lot coming up this week. Today, in terms of economic data, I didn't see much, but I'll take a look at it. Let me go and read it to you guys. So Brainard, who's a voter of FOMC, she's going to speak today at 2 o'clock. The period of a blackout period where they don't speak is done because we have the FOMC this week. Tuesday, we have PPI. Again, this is Producer Price Index. This is what businesses pay for. We saw how CPI, how bad that was. PPI, probably no different. So again, we're going to watch that. Expect a little bit of weakness, obviously, or volatility. I can't even say weakness because we may just be baking it in now. Core retail sales on Wednesday. That's at 8:30. And retail sales. FOMC on Wednesday. That's the rate hike. Here's the rate hike we expect. We expect 50 basis points. But will the Fed do the right thing and do 75? That's really the question. I think if we get 75, the market cheers. I think if we get 50, we fall. That's basically what I think in that regard. We are holding 3,800 so far. I had this discussion with the investment club, and of course you guys on YouTube. If 3,800, I want you to listen very carefully. We retested 3,800. We are holding. This could be invalidated at 931 for all I know. But if 3,800 holds, we start filling those upside gaps, and we get a sustained hold, I'm talking about at least till the end of June, post FOMC, post PPI. If we stay above 3,800, that's going to tell me a lot. That might indicate a bottom. That might be it. We have a lot of reasons to go lower, but for some reason we're still holding. Why? That's what I want to know. Again, are yields, oil, commodities, are these going to flip? Again, oil is still elevated in terms of RSI. These oil companies, XOM, it's starting to get overbought now. Be careful because that's the next shoe to drop. Where you start saying, oil bulls, for example, are going to start saying, okay, man, I'm a little extended, let me get out. And then tech, small caps, and those names are going to start catching bids as you get a rotation. If you do. If you get to the point of past 3,800, then you can start really making some forecasting here. Excuse me. Forecasting here on the 2-year. We did a Fibonacci extension from 4808, which is the top, to where we are. 3664 would be the 161.8 extension. Not terrible. 3580 could be definitely in play. Does that mean I want to go ahead and rush and buy anything? No, I buy SPY-G every week. Again, I'm just looking for opportunity out there, but I need to see we get a sustainable bounce. 3,800, keep an eye. That could be over within 920, 931. But again, I'm watching that very closely. Let's see. Morning, Carl's thoughts on Apple puts for this week. Again, we talked about those. Again, Apple is bouncing now, and we have a gap to fill. So no, I would not do it as of yet. We may get to 137. Guys, if you're a trader, you're trading volatility, look at those gap fills. If you start getting a bounce in the morning, those gaps are going to fill. I would not do anything until 10 a.m. 10 a.m. wait. If you have SPY puts or you got some puts overnight, get rid of them as soon as possible. And then 10 a.m., take a break. 10 a.m., see where we get. Do not trade right off the rip. Would you buy more ETH? Absolutely. I do every week. Not a lot, but I buy every week on dollar cost averaging on Coinbase. So again, slowly but surely, start getting there. And then we'll see where we go. Man, let's see how low we can go. I would love to buy more. Dow and Nas set to fall. They are falling because of futures. Remember, futures, and then you have the spot. So again, on the index, you're going to be red today. Yes. Apple will fall tremendously by next quarter due to no exports from China. That's true. I was reading a little bit in regards to Apple. Keep in mind, guys, Apple has the cash hoard to cover pretty much any storm. Them, Google, Microsoft, these guys have cash. They can provide special dividends to keep shareholders at least engaged somewhat. And Apple has, in comparison to other tech companies, they've been holding up better. Let's just say they're the best house in the worst neighborhood. Not exactly exciting. But again, Apple at least has the cash to weather any kind of liquidity crunch where investors are chasing at least some kind of yield. Apple can always increase the yield. They can increase buybacks. They have the weapons, let's just say, to kind of keep the investors invested in a great company like Apple. I mean, why not? I own Apple, and I don't think I'm not selling anything. No, out of my cold dead hands, you're taking my Apple, honestly. So 133.25. Would I get into puts? No. If you start breaking below 132, then yes, that's where you start really looking at some possibilities to the downside to ride to around 130, 129.82. That's your 161.8 extension. We talked about that with S&P futures. Very scary times, Carlos. It will get worse in the macro level. Absolutely. But this is what makes a market, guys. We've talked about this. I remember this conversation very vividly in March of 2020 when everyone thought the world was over. And that was over. That was worse because everyone was locked down and everyone was afraid for their lives, in a sense. So in 2018, same thing. We had a Fed increase. 2016, we had the elections. 2011, the U.S. lost its AAA status in terms of credit rating. That was a big deal. We had the European debt crisis, Greek debt crisis. We've had war. We've had oil scares. You name it. We've done it. That's one thing. If you've been doing this for a while, you've seen a lot. Do I think this is an event where the world ends? No. I thought, honestly, 2008 would be the one where the world ends. Capitalism would have ended. But you got to understand, guys. You have cycles to markets. That's just the name of the game. As the money supply contracts and there's less money out there, this is what happens. The good news, if you're looking on a macro level, guys, the stock market and the bond market are doing the Fed's job. The Fed has only raised what, twice? They didn't have one in May. They had one in April and they had one in June. They had one in March, April. Yep. So mind you, there was a quarter point and then a 50 basis point. Look at the moves that we've had since then. The market is doing the job for the Fed. So keep that in mind. The only issue is that I wish the Fed had more ammunition down the line. If we really get bad, they can cut rates or do QE again. And it's the same cycle over and over, same old deal. But is this a March 2020 event? Well, depends on you. Depends on how you feel. Do you feel at a point where March 2020, you were like, oh, I'm prepared? Or here, where I'm prepared now for a possible recession? I've had this conversation on YouTube before. Take a look at our investment seminar from 2020 in March, and I actually break down the same thing I'm saying now. You have your emergency fund. You make sure you have your cash. If you're invested and you don't need the money, leave it alone. If you need the money, sell. Do not go hungry for crypto. That's stupid. That is really stupid. Do not do that. Do not be cash poor where you have tons of crypto. Dude, sell some if you need it. If you don't need it, then you leave it alone. Simple. Again, because if you do sell, guess what? You're going to pay taxes. You're going to pay short-term taxes, long-term taxes if you're profitable. No, we don't want to do that unless you need the money. Keep in mind. Is it possible to increase by 75 basis? Yes, that's a possibility. Barclays is predicting it. Take that for what you want. But at the end of the day, guys, understand that that's very fluid. We don't know. 75 basis points, I think the market does cheer that. That would show the Fed is very serious of cutting off inflation. Will I think they do it? I have no idea. I'm leaning towards they don't, personally. U.S. in dire straits more because downtrend due to possible increased war tension with China as the U.S. is in the waters of Taiwan. Well, yeah, there's a lot of stuff. We still have the Russia-Ukraine thing. Yeah. But this Taiwan thing didn't start just recently. I mean, we've been having issues with China and Taiwan since the development of the Communist Party in China. Cold War and everything. So this isn't new. I mean, there are a lot of tough talk from China. China needs us as much as we need China. I think that's what everyone needs to understand. It does no benefit that China does any kind of act of war, especially now. China's going through it too. You act like China's in a bubble here. They're going through it too economically. And listen, no matter what country you're in, money talks. Money talks. That's all that matters. You can't really be nationalistic with pride and want to invade a country if your economics are crap. Not very good for morale. So if I'm speaking in terms of politically, seeing the political landscape, let's just say that now would not be the smartest time for both nations to get into any kind of aggression with each other, not where you have economic uncertainty. Not smart. Am I buying coin? No, I'm not buying coin yet. That's for sure. Is it a possibility down the line? Sure. See if Bitcoin can actually bounce. Listen, Bitcoin and Coinbase are going to work neck and neck. So again, I still think we're going to get to 19,000. Does that mean that Coinbase is going to fall? Yeah. Let's wait and see if it fills some gaps, and then we could play that downside puts for a little more time ahead of it. But again, guys, I've had this discussion in March 2020. Um, 2018, same deal. Again, we had, I believe, 30% drop. And then we had COVID. And then before that, debt crisis. You name it, we've had it. This is not new. The problem is that we have recency bias. All we know is yesterday. All we know is 2 days ago. We don't know what happened 2 years ago. We kind of try to forget it. And it was different in COVID because you had the Fed step in. Remember? Yeah, after it got crushed, the market, and then we turned. Now, just now, guys, if we close at this level on S&P futures, we are now officially in a bear market, 20%. But the question is, do we close here? Keep in mind, technically we're not in a bear market. I know, technically, right? Textbook, but we're pretty much there. Do we hold this? 3,800 needs to be on your level. Let's take a look. Anyone who has SPY puts, I take them in the morning. Have a great rest of your day. Keep things in context and perspective. You still have upside gaps. Be careful. Have a great rest of your day. We'll catch you guys later. Cheers.